Well, here we are. Hello, everybody. How are you? Welcome. It's a great pleasure to be here with you again. Hope sounds is fine and recording is fine. I see, hi, Boyki. I see a lot of new faces or names here today. So I wish you all enjoy today's webinar, okay? Uh, Today I would like to discuss with you how to manage your account or portfolio by understanding how to manage risk. We know most people believe that the most important thing here at Forex market is, I don't know, technical or maybe fundamental analysis, meaning the ability to forecast market movements and take advantage of them. Yet, I believe that managing money is also as important as understanding analysis. And in fact, if you are an expert analyzing but fail managing money, you will lose big money too. So let's discuss some tips of how we can manage money and how we can set stops and how we can face this risky part of forex trading. Okay. If you have any questions, you don't hear, you want to participate, I will be very glad to share time with you. Okay. Well, I know this sounds repetitive, and you will probably heard many times talking about it, but using stop loss is one of the better tools we have in here, although not the only one. If we choose not to set a stop or not to set a limit, we are very close to gambling, and having no rules about managing our money is more or less the same. We need rules in forex markets, rules for trading, rules for entering the market, rules for exiting the market also. In either way, okay, positive or negative, but rules. Because see, any job, any professional job is exactly that, be a professional. And I see many people opening a real account few days after meeting Forex, thinking they can save not only the day, but the century, and we know that's not true. So, if we have rules for trading, why don't have rules for managing our money? Of course, these rules are nothing to do with winning or losing each trade, but in the long term, they really count if we want to be really successful, okay? One important subject related to this is what I always told you about how many people spend months jumping from one system to another as soon as they get 2 or 3 losses in a row. Time goes by and they don't have a tested and reliable system to work with. Or maybe they have, but they just not tested enough to find out how reliable it could be. So, the first thing to consider here is to having a tested system, okay? We shouldn't forget about the big numbers law, that we are choosing to trade not to get rich in 2 good trades, but to make this quite profitable a long time. And that is all about testing the system at least for 6 months and find out how reliable it is. We need to understand all the facts of our system to finally trust it. We need to know how many good trades it gives in a row, how many failures in a row, the average number of pips were to take profit of, and how many pips a pair could move against our position and even so came back, or where we could consider a position loss or bad signal, okay? So, back to our risk management and taking notice of what I have just said, before each trade, we have to have one thing for sure, and that is the number of pips we can lose without harming the account. Sure, the idea is of course winning, but anyway, we have to think how much are we able to risk in case market reacts against our expectations. Hi, Ray. Because it's far more easy to lose than to win. As an example, let's say we have a $10,000 account, okay? I have made a small Excel sheet to show you how the risk is involved in our trading, okay? So let's say we have $10,000, okay? It's just an example. And we lost 50% of our capital. Now we have $5,000. And we must win 100% of our capital just to get where we started. I hope nobody here had lost that amount, but the point I'm trying to make is, with this example, is that if you lose a 50%, you need to win 100%. So here is our first rule. We have to define what percent of our capital we should risk in each trade. we usually recommend not to exceed the 2 or 3% of the account per trade. But once we get practice, we could risk a bit more, and of course, it's not a fixed amount. We can vary in a determinate range of our risk, okay? Let's say between 2 and highly 5%. So, if we have a $10,000 account, we could risk, I don't know, maybe a 2%, you see here? So, if we lose our one trade, we just lose $200, okay? And our capital will be 9,800, okay? You see it here, yes? If we, in the terrible case, we lost 10 trades in a row, still we have lost only 27% of our account, okay? Yet, see the difference and what happens when we risk a 10% of the account in the same number of trades, okay? It's highly probable, I know, having 10 losing trades in a row when you have a system and you're quite trained in forex trading, yet it could happen, okay? So by the end of the 10 trades in a row, we have only the 38% of our capital. And coming back from there, I don't know what you think, but I'm sure it's almost impossible because not only the account is harmed, but our cycle is harmed too. We are psychologically harmed, and I don't believe we can. I don't believe anyone can came back from such loss. Okay, I have another sheet. See, if we lose the 10% of the account, we need an 11% winnings to recover our capital. But in the case we were talking here that we lost almost the 60% of the account. Okay, see what happens. We need to win 150% to recover just the initial capital. See, so I believe just risking a 2% in each trade, it's the most recommendable thing to do, at least when you start trading, okay? If the balance keeps growing instead of decreasing, like in this example, well, you can risk a bit more per trade. Yet, let's remind what happens when you risk a 10%, okay? You lose a 10% of the account in each trade, and I don't know, 5 losses in a row, that it's probable, okay? Something that could happen, okay? Leaves you mostly in the half of the account. So I don't see this as a great idea. I recommend you to risk not more than 2% per trade. But once we know how much we risk, okay, from till now we know we need a great system or a reliable one, not the greatest, because there's no such thing as a perfect system. And we know how much to risk per trade. So we have to define right now how to control risk, and here is our second rule. Okay, we must control risk, by capping losses. Stop loss orders allow us to set an exit point for a losing trade. Okay, so if you are short a currency pair, the stop loss order should be placed above the current market place, and if you are long, the stop should be placed below the current market place. So these stop loss orders help us to control risk. Yet, I think these orders are kind of intuitive, okay? Because you don't know when you do not want them to be hit. However, and remember what I'm saying today, you will be happy that you placed them. But the only way to control our greed is through logic. If we are seeing a pair moving the other way we thought it would, and become moving farther and farther, there is no use to say, it will come back, it will turn, I will wait. Logic, just logic, is telling us that either we fail to forecast market direction or something happened that takes the pair turn around. In both cases, it's better to be out of the trade as sooner as better. So, we know how much capital we are going to risk in each trade and that we need to place stops. And now, next question will be, where and how should we place the stop loss orders? Well, here's I would like to say my opinion, and I would like to hear yours. But it is very difficult for me to say to someone where the stops must be placed. See, That's because placing a stop loss is a function of several variables, sorry, like the size of the account, the risk involved in each trade, the time frame we choose to trade, the losses tolerance of each one of us, see, and not to mention market conditions. So, saying the stop should be placed at I don't know, maybe let's say a 10% or a certain percent of the entry point for all conditions is not for me logical. When stops are too close to our entry pros, to our entry point, sorry, the chances to get stopped are very high, and if stops are very far away, well, if they get rich, they could really harm the account. So, I don't know. I told you some conditions we must take in notice of to place stops, and I will tell you how do I place one. But stop loss orders should not be so tight that normal market volatility triggers the order, and at the same time, limit orders should reflect a realistic expectation gains based on the market's trading activity and the length of time one wants to hold the position. And that's related of the time frame we are choosing to trade, okay? Both limits and stops should be part of our general trading part, meaning if I choose to trade, I don't know, maybe 1 hour charts, my stop will surely be smaller than if I trade daily charts, okay? And the same goes for limits. Also, if I'm trading a 30-minute chart, I can expect to take a 100 pips profit. And let's notice something I said a few minutes ago. Normal volatility. I don't know, you are seeing market this last 3 weeks. We have everything but normal volatility, okay? In cases like this, we need to adjust our stops and our limits, sure. But for how long, how many times? Well, it's not easy to. Yes, Harley, they are not. They are not easy to forecast how long this high volatility we are seeing. I don't know, 3 weeks now. How can I forecast and say yes, the GBP dollar will continue moving 300 or 400 pips a day when usually moves 150? See, so that is one of the things we must consider, market conditions, okay? And of course, this happens, I don't know how many times, how many weeks a year. Do you believe this will last a year, this volatility we are having right now? I don't think so. Although I certainly believe it will last at least, I don't know, 2 or 3 weeks more minimum, okay? So I'm reading Charles Rochofi make a comment. You lose 50% of your account in one trade. So that's why, because you'd risk too much in one trade maybe, or you use a very long stop loss. And both things I'm telling you we are not supposed to do if we if we really want to become successful, okay? So coming back to how to place stops and limit orders, okay? And in normal market conditions, okay? My personal view is that we can take advantage of market memory and the bunch of information that daily trading gave us, okay? Regarding what I call market memory is what we can call supports and resistance, both used as stops or limits, okay? And even entry points, okay? So let's start with just one chart. So just to make an example of how to place stops and limits in a trade. I hope it's fine. I just for the administrator as they are recording the session, so you can hear me again whenever you like to. Okay, you are looking at a 4-hour Japanese yen chart. Okay, I choose this pair because I'm kind of worried about euro dollar and everybody talking about it. I'm a rebel, you know. If everyone is going that way, I will go the other. That's just me. I'm really bored about euro and dollar. Anyway, talking about this certain pair, I have been commenting in the blog all this week and previous days, and that it has a very important important, sorry, support in the zone around 105.50. See, around this zone, we have a huge number of candles rebounding around there, and here, around here. Is what we call a congestion zone. Okay, we have another minimum here. If we move backwards to old times, we will find that the pair usually rebounds there. Okay, let's find the place. Here we have another rebound, another rebound. This is how I set a first support. So regarding to this particular pair, and noticing just candles that at the moment the general trend is bearish. Okay, I small the charts, so we can say that the general trend in the pair is bearish. See, yet 105.55 is our first support for today. So I guess that from here the pair should reach that zone, being in this bearish trade, place to place the limit order. Okay, and at the same time, looking to the upside, we found out that around 106, see, we have a congestion zone where the pair also rebounds many times, yet not as much as in 107. Okay, that's a really tough zone. Anyway, if we know, so in this case, resistance will be around here and supports will be around here. Well, if we are following the bearish trend, we should place our limit around this zone, maybe at 5 pips above it, just in case. And the same goes for the stop loss. Okay, this zone, maybe some pips up, just in case. See the general idea of placing stops and limits? Of course, I'm looking at the 4-hour chart, so 30, 40 pips limit or stop. It's a good number of pips. If we are trading, I don't know, 15-minute charts, okay, we can measure 15-minute candles and find out that they move 15 pips, 10 pips, not more than that. So it's highly improbable that if we have a signal here, we could get 40 pips, okay? But if we look at these charts, we see we have a support here zone, congestion zone around here in 50 minutes. It's not the best idea to place a support in 50-minute chart. Yet, once the pair passes this minimum of today that rebounds many times, several times, the chances are to the downside, okay? Yet, as we are trading 50 minutes, I don't know, maybe 15 pips will be the right target, and of course, more or less the same, the stop loss, okay? And regarding to information, well, see what happened yesterday opening with Euro and GBP, both, they were trending kind of higher these last days, this last week. Sorry, that's not the charts I want you to see. This is a weekly GBP dollar chart. Can you see it? And the pair was trending higher. Indicators were pointing up. Yet see what happens with information in the opening. We know we have the famous and well-known bailout. Is that fine? Is that okay? Plan in the U.S. About saving the financial crisis they are having, and the Congress approved or kind of the famous plan. So the dollar started the week with strength. I don't know. See, just in what day it moves. What the pair moves in almost a week. So I lost my point here. Okay, I remember now. Sorry. See what happens. See, the pair was quite bullish. Yes, if we turn to daily charts, it was also bullish. Yet this kind of external information changed completely what's going on. In fact, last week we talked about what we used to call flags, and this was kind of a flag in the pair, and it was even clearer in Euro in daily charts, and that's was surely continuation figures, okay? if we take a look at them, they were clearly suggesting a bullish continuation. The pull, the flag, the congestion zone, the pair was meant to break to the upside in here, and also the GBP. Oh, not that. See here. Yet they start just under the flag and change completely market conditions, at least for today. With these days, I don't dare to forecast too much after this bailout count. However, the pair that was quite bullish last Friday is clearly giving bearish signals today. And if we were catching the middle of a longer term trade, I hope you all have stop losses in these cases, and because those kind of movements we are seeing these days, that's why placing stops is so important. Okay, we have this trend line, we have this minimum. Okay, something's happening. Okay, maybe bigger here. It's full screen. It's okay. I'm seeing it full screen. Let's try again. Okay, I see you post some words. I will answer your questions. Yet, in this case, if we were taking a bullish trade in bigger charts, like daily charts, well, we have this minimum here with maximums in daily candles and another minimum here and this trend line. So in this case, our stop loss will be, I don't know, maybe 40 or 50 pips under this trend line, and that was the place to place it. Sorry, I don't know if I'm repeating too much the place word yet. Sorry for that. Yeah, the idea is that depending on the time frame we are trading, that's how we set our stop loss. And no matter how good analysts we are or how many things we saw in market, it's not quite easy to forecast kind of these things. Okay, of course, if you were watching Bloomberg or CNN or any news channel yesterday, maybe we could know this happens. But if you were into the trade from last Friday, I mean, and the opening, I don't know, 100 pips under the close of last Friday, changed everything in your trade. Okay, so back to charts. Questions. Okay, you ask, bro, Hofi, I don't understand quite what you're saying, but yes, I recommend you to risk not much more than 2 or 3% of your whole account in a trade, per trade. Okay, that's the maximum you can risk, or should risk, sorry, in one trade. Okay, the 3% of the total amount of the account. We use $10,000 as an example, and that means you should risk not much more than $200, 300. Okay, if you have a 100,000 account, well, you can risk 2 or 3,000. See the difference between? And I don't understand what you said about entry points. So if you wish to clear it for me, I'll thank you. Rama, you are asking about use Japanese yen. See, Rama, you are asking just for the only pair that is not moving that much these days. I don't know what happens in half an hour when use stocks open, and use stocks usually put some influence in this pair, but I don't know. As I told you, GBP dollar, for example, moves 150 pips per day. And if today we place a 300 stop loss pips, we were stopped out because it moved 400 today. I don't know. I don't found logical to place such number of pips in of stop loss in a trade in order to contain the daily average, because see, when trend changes, the daily average gets lost as a concept, and you lost 200 pips for nothing. I don't know. For example, at actual pips and actual value, about dollar Japanese yen, I don't know, 105.50 is a good support, and 105.2010 is the other next support zone. The pair is rebounding, so I believe that under 104.90 you have a losing trade. So why risk or why wait 100 more pips? You are risking double. Okay, from actual price, I believe 100 stop to the downside is more than enough. And regarding that particular pair, give me a second. I will place the chart again. We have two things to consider yet. Give me a second till I place the chart. One is this descendant trend line. Okay, sorry. This descendant trend line that is also close to the gap it left last week. So I guess this will be, I don't know if you're asking me for a bullish or a bearish trade, but in daily charts or long-term term, I believe the pair will hold between this zone, 105, 120. I don't see it falling further, not today, not these days. And to the upside, this is the zone to consider, the gap zone of last week's opening and this trend line, okay? Yet in both cases, we are not more than 100 pips, not more to any, both sides. I don't know, maybe you're risking too much in that case. I don't like it. So, next question. Harley, does leverage apply only when you're holding too many lots? I mean, get ugly if you are in a losing trade. Harley, as I told you, you can risk 2% of your account per trade, but that doesn't mean you must hold your position eternally. I don't know. I have given an account. I wish I could show you the account from just 1 mini lot trade, shorting euro in 135, I believe. What's the point to? It's okay. It's 1 mini lot in 15,000, but it's $2,000 losing today. Okay, 2,000 pips gains. Do you believe you can rescue such a trade? I don't think so. I lost connection. Can you hear me? I see my MetaTrader, my charts are lost. Can you hear me? It's okay. Okay, it's just if it's just charts, no matter. Okay, but what I mean is, if you have to risk, Harley, you have to risk 2% per trade. You can open, but if you open 5 trades, you are risking 10% of your account. So, okay, no image. I turn it down. Don't worry. If you open 5 trades, you're risking 10%. If you don't care, if you hold those lots or those positions to the downside or to the outs, and you hold those positions, they get ugly. They can all get ugly, and what you will lose. So place a stop is the best thing you can do, and taking notice of trend of what I've told you about supports and resistance zones. You can also add FIBO levels. I don't know, Bollinger Bands if you like them. And there is a lot of ways to determine where to place a stop or a limit. Each of one should have one. I'm not just suggesting you to use what I use, but find the ones you need. Okay. Rama, you are asking if there is a relationship, sorry, between stop losses and average daily range. Okay, there is yet again average daily range. See, GBP moves today 3 times average daily range, and you get stop. So, would you like to risk that much? Okay, see the point? Of course, there is a relationship between stop losses and average daily range. Yet, see what's happening in these 2, 3, 4 last weeks. There is no such thing as an average daily range. So you can extend the average number of pips you use for trading. Yet how much? That's something we must determine by, I don't know, maybe risking a less percent of our account and extending our stops, or if we are following trend, and if we are not, and we know something like what happened yesterday was going to happen, and it was part of it, was forecastable, easy to see. Well, place a stop, a tight stop, okay? I don't know, maybe many people like to enter to the gaps. If you enter the market yesterday, gaps were not covered, and mayors fall, I don't know, 200-300 pips more than the place. So no, I don't like setting stop loss related to daily average. Okay. Okay. So Boyki, about margin. Uh, I don't know if you want. I clearly understand what you mean about margin. What you think about what you want about talking about margin. I guess it's something more or less that I was saying. Okay, but I'm not sure if I understand your question. So can you please remake it? Rama said, "What's the optimum leverage one should take in order to balance profit at risk?" That's what I was saying to you. Not more or less than the 2 or 3% per trade. Okay. I usually risk a 2%, not more, with a fresh account, a new account, and wait until I build it up. I don't know, 1,000 or 2,000, and then I move up. Okay, I risk a 3%, but I don't. I don't think because you see many platforms have on. Okay, thank you, Boyki. I will come back with you just soon. Uh, Maybe you are all Rama, Harley, and Boyki talking about the same, okay? And that's why I talk about percentages, okay? If you have a $10,000 account and you are trading mini lots of one 100, okay? That's a 101 as an example, okay? You can open a trade, and as I was telling you, I have a $15,000 account with that has been passed to me with one mini lot, okay, shorting the euro at 136. So what's the point of holding that position against rates, okay? Because it has negative rates, and this in mind, we are paying interest in of that shorting position. And what's the point in holding 2,000 pips against you, okay? Of course, not now, but when the pair reach 160, okay? And that's why the relationship within both things should be taken notice. Okay, sure. If you have $20,000 and you are risking 100, one mini lot, I don't know, 3,000 pips means $3,000, and you still have 17 as to continue trading. Yet, what is the point in holding that position? Of course, I believe that as larger the account, the best for any trader to hold any position, losing or winning position. Yet I don't see the point of doing that. I'd rather set a stop loss, get out of the market, and continue trading and searching for another good trade, because it's obviously a bad trade. Okay. Of course, Harley, if you have such a mini leverage level, it's okay if you don't trade more lots that you can afford. But see what I was meaning? If you're trading, I don't know, if you are 1.60 right now, I believe, in euro bull, do you find quite reasonable to hold that position till here? I don't know, maybe when the pair break the 150 level, it was time to close it. Yet nobody wants to take a $1,000 lost with one mini lot, and that's what happens. Psychological is messing with us in that moment. Okay, we say, it's just one lot, we can hold it. It's just a small leverage, I can hold it. And the fact is, yes, you can hold it, but it may take years to the pair to return to the maximum, historical maximum. Okay. So what we do in the middle, we have a floating loss that was worthless, that is harming our mind, and it's not doing nothing for the account. So I believe it's better to close that position, no matter how small the leverage is, than holding it along the time. Okay? Yes, that's right, Harley. It's too risky holding positions overnight right now. I don't know, volatility is too high, and we don't know what will happen in the next 15 minutes, not to say next week. I believe that market is very hard to forecast these days, sorry, because the fact is, and that's something very personal, that's something I believe, I can understand why why dollar is getting strength with this 5% of the GDP country injection, capital injection to save bad investors. In fact, it's like donating the money to gamblers. See what I mean? That's what I believe. See, don't take it like the final truth yet. I don't know, putting $700 billion that represents the 5% of the country GDP to save companies that gamble with money. Is that really good for a country? I don't know. It's I know. Also believe that it's not a solution to actual problems. It's just, but they are just buying time with this. But they will have to do a lot to recover the financial sector, and I can find reasons for dollar to get strength too much more that it did these days. Anyway, that's what I believe. Rama says, I, I think we can trade both ways. Okay, we can trade when market has low volatility, and we can trade with markets has high volatility. Yet, if we understand and we detect the situation early enough, see, if the market is highly volatile, it's kind of better because can I say you? It moves quicker to the chosen direction. Okay, once it breaks the support, it will quickly run to next one because of high volatility. And as I move between, I don't know, 30, 40, 50 pips ranges of stops and resistance zones, these high volatility days do the job fast. Okay, but you have to detect market conditions before placing any trade and see this kind of stuff and trading according to it. Okay, I believe that these are days of moving fast into and outside the market. Harley, I know, yeah, I don't want another crash. I understand your point about the American situation, of course, and of course this will help for now, but that's the point. I guess America needs to do something more for saving things. But okay, I'm not a Fed member. Okay, so it's just an opinion. Rama, the truth is, I believe risk aversion is a word used to describe. I don't know what's going on with the market. Uh, it's more or less the same. When you read in the news that risk aversion did this, risk aversion do that, the final conclusion I get is I don't know how to justify what's going on with markets, so I said it's risk aversion. The fact is that dollar will not get stronger because, as I was saying, I can see dollar getting too much stronger these days. I don't know what will happen this month or next, but I guess we need to see much more really water running under the bridge to say dollar will become stronger anyway. CDG, exactly what you said. It's just what I like. See, I'm looking at Japanese yen approaching to the target zone I proposed, and it's okay. I am out of the market, but yes, you have to have your style, and that's what more or less what I was going to say to conclude the webinar, or the conclusion of the webinar. Of course, we can continue talking. The best way to avoid, or better say, lowering our exposure will be to use a simple trading method. Okay, that includes supports and resistance, and as you say, fitable to our style. It could be an intraday trading, a 30 minutes charts trading, or a weekly charts trading, no, a longer term trading. No matter what, you need a method. You need to go along with the trade and decide your position, including stop loss and limit orders, before entering the market. Uh, Remember that what we were talking. Well, you need to be convinced and really and ready to act in all the specific conditions it could happen. As my teacher always told me, thanks God, market has only two directions, to the up or to the downside. What if it have more? What can we do? And the fact is that if you have a plan, you have entry point, limit, stop, and that's it. That's the end of the question here. Then we need to be disciplined, okay? Discipline includes hitting your stops and not following the temptation to stay with a losing position that has gone through your stops levels. And another thing we didn't discuss, but we should add right now, is that we never had to add to a losing position, okay? Right? It's like the example I was telling about the euro dollar. I don't know if you are holding a 150 bullish position and place another in 148 and another in 146, and that's what usually traders do, okay? Adding to losing position, and you are risking more capital, and, and that's not the idea. Okay, place your stop losses and be happy with them. Learn to live with them. That's the best thing I can tell you right now. New York City. Yes, it's like surfing a huge wave. But of course, it's risky, okay? If you are trading forex just for the adrenaline, I'm not sure how long you will survive here. I don't want to offend you. I want to apologize if my comment is harming you. I find out that English is not so rich language as Spanish, and I found out that I think I can offend people with my comments. It's not the point. So I don't. I'm not sure if you're surfing the market because of the adrenaline it gives you. So be be careful, please. Okay, I'm saying you with, well, as we say in Spanish, with buena onda, with good feelings. Okay. So, do you have any more questions? Any more comments? I will leave you my messenger address if you want to join me. Thank you, Harley, for making. Okay, okay, sorry. Okay, New York City. Oh yes, see how much I progressed today. I went on that. Yes, that's the. No, thank you. Okay, Rama, good questions. The difference between risk management and money management. I don't know. Uh, Managing money is almost, of course. Thank you. Money management, sorry, means it's better. I don't know. Maybe it's more or less the same, but you apply that kind of things when to portfolios. Okay, if you have a portfolio, if you're not just trading your money but trading other people's money, okay, you have to manage money and understand that. How can I explain this? One thing is the percentage of risk you take per trade, okay? And the other money management, sorry, involves how how conservative will be your trading, okay, in order to make profit. And there's where the difference lies. Anyway, yet I will leave you also my mail address. If you have any questions, I will be very glad to answer them. I always enjoy being here. I hope in October we'll be back. And I know my English improves, CVJ. Practice makes perfect, as Boyke says. In fact, today I joined early this session to listen some English. It's a pity Ed lost the session, but something happens. We do have lives. So it has been a pleasure to be here, and I really enjoyed it. I hope to see you all soon. And I will okay, thank you for the Spanish. I will put a brief part of this webinar in my blog. Thank you all for being here and thanks again. Really, I really like it. Bye bye. See you soon.